Hey everyone, welcome in to another daily editorial here on the KE Report. I'm getting an update from Volt Lithium, following up on a news release from earlier this week, October 23rd, where the company reported that it has now produced battery-grade lithium carbonate from Permian Basin oilfield brines. This is an ongoing field program that the company has using its proprietary DLE technology to produce this battery-grade lithium carbonate from these oil field brines. It's a unique aspect of this company. I am chatting right now with Alex Wylie, President and CEO of Volt Lithium. Company is traded on the TSX Venture Exchange under the symbol VLT and the OTCQB under the symbol VLTLF. Now, Alex, last time we were chatting, we were talking about this DLE field unit scale up. It has been operational since September 17th. And you've already produced this battery-grade lithium carbonate. Talk to us about how important this stepping stone is now for the company, and I think even more importantly, showing the market what your DLE technology is capable of.
Well, thank you, Corey. For us, producing lithium carbonate in the field is a critical step on our journey. What we've determined over the last number of months since we received our investment from our strategic partner, we have put a unit in the field. We started operating in September, and now we're producing battery grade metal. What we want to be able to do, it's nice to be able to produce carbonate, but we want to sell it as well. So we've started our program where we're going to provide samples to potential offtake groups and customers. We've been told by future customers they want to see battery grade metal produced in the field. We've now done that.
Can you give us any insights on how much of this battery grade lithium carbonate you're able to produce from the field unit that's operational?
Yeah, what we're doing right now is we're going through a program. So we've been running our system, we are improving our system, and our target in 2024 is what we're calling cash generation. So we want to get some initial product into the market that people can buy, not in huge quantities, but we want to provide enough analysis so that people can say, okay, yes, we like this product. And then as we move into 2025, working with customers, we're going to scale up our production. So we're going from cash generation by the end of 2024 and into cash flow as we move into 2025. And cash flow really will be when we start to scale up our project. Again, what's most important for us right now, we're running our operations, we're managing the efficiency of our operations, and that's a key step before we start to scale up.
Now, when you talk about managing efficiency and just overall operations, how do costs play into this? Because that's the one question a lot of people have is just how much it will cost using these DLE systems to produce this sort of lithium carbonate.
It's a critical component. And so the two major costs that we have for our system are power generation, because you use a lot of energy to create your lithium, and then reagent costs. And so the thing that we're really like about where we're situated in the Permian Basin is power costs are really low. So that gives us an automatic edge on a lot of other groups that are producing that are not in oil fields. Reagent costs, that's a critical step to the managing. So as we improve the efficiency of our operations, we use less reagents, which makes us more profitable. Now, a key component for us in terms of our operations and why I believe our costs will always be lower than most, and that is we don't drill wells, we don't move water, we partner with the oil industry. So the whole lifting costs and transportation to get it to where we are, we don't bear that cost. That's a significant component for most people's costs when they're doing their operations. So if you take that off the equation, we're much more profitable than most.
So, Alex, I guess to that whole target or cash generation goal that the company has, back to that question that I asked about how much of this lithium carbonate you are producing, I guess you have sent out some of these samples. How many? Who are you sending them out to? What more information can you give us on in terms of the overall size and quantity of the samples you're sending out?
Yeah, I mean, right now it's small samples. What we want to do is produce the lithium chloride in the field. We're creating the carbonate at our field simulation center in Calgary. What we're going to do once we've got our procedures set up, We're going to start producing the carbonate in the field. So we're taking our production, we're sending it up to Calgary, and then we're producing the carbonate. What we're going to do over the next while is we're going to use the system that we've been producing our carbonate in-house, and we're going to do it down in the field. Not big samples to start. We want to be smart about how we manage our inventory of lithium chloride that we create carbonate from. And again, once we've got sufficient quantities, then we start to scale up. So the most important part that we've been told by future customers is show us you can do it from the production in the field, show us what the samples look like, and then let's start talking. So, it's a bit of an iterative discussion. It would be nice to be producing 1,000 tons per annum right now, but that comes at a big cost. So our view is be smart about how we scale up and do it in conjunction so that we can sell it to future customers.
Okay, so you are scaling up. You have ongoing production here. When do you scale up to a much higher stage? Is that after you have an offtake agreement in place then?
We're going through those discussions right now with our partner. What we do is every day we're producing lithium. So we're doing our runs every day. We're getting smarter with the system. We're making sure that when we start to do our scale up, we've got all our operating parameters in place. And that just, that's part of the process of what we're doing. The key dynamic, though, and the key critical component that we've had to do is operate in the field, and that's what we're doing.
Now, you said that you can scale up with your partner, the one that you have the field unit on site with. But the question is, have you tested this DLE technology on other oil field brines? Because it's a question I get a number of times with this DLE technology is, does this work on different sorts of brines, or do you need to come up with all new systems for each type of brine you're processing?
Yeah, we've run our system at our field simulation center with pretty much every major basin in the US and Canada now. The reason why we like the Permian Basin the best is volume. So total water production out of the Permian Basin is 19 million barrels of water per day. There's just nothing like that I've seen in North America, maybe the world. The Permian Basin is very unique. So this is our first basin that we're focused on. Why? Because we can scale up and we can become a world leader from the Permian Basin alone.
So, Alex, what sort of news do we look out for from the company from here? Now that ongoing production is happening, you're sending samples out to potential offtake partners. You will scale up, but you still need to get some of these deals signed. You need to make sure that you do generate that cash and then cash flow into next year. So what sort of news should investors look out for moving forward from here?
I think that it's important that we've talked about getting into operations. I think what people will need to see is, are we efficient in our operations? So that's a key component. I think people will want to see, like what we'll be talking about as we move into the latter half of 24 and 25 is, what does our scale up look like and how we're going to achieve that scale up. So there's a whole number of things that we're working on right now. What I can say, Corey, is producing lithium in the US and selling to potential US customers is a big deal. There's a lot of interest in purchasing lithium made in the US, and that's a key focus of ours. Again, what we don't have to do is drill wells. What we don't have to do is put in infrastructure to move the water. So we've started our operations. So we will scale up. As we move into 2025, we're going to be scaling up, and I think that's going to be very critical, not only for our business plan, but also for security in the U.S. in terms of 80% of the lithium in the world right now is refined out of China. We've got to change that balance of power. So we need a group such as ours to get into production so that we can change the power struggle on that.
So it seems to keep coming around to the efficiency of operations then. If it's something that you will be telling the market about, do we find this out in financial statements, or will you be able to issue direct news releases telling everybody about efficiencies and costs?
We absolutely will. It'll be efficiencies to start. So here is an example. What we have press released in the past was that we've built all our models off of a 2-hour cycle time for lithium extraction. Now, what we were able to accomplish this summer is we got our extraction time down to 1 hour. And what we're trying to do is do better than an hour. The reason being is the shorter the cycle time for the reaction of lithium in terms of extraction, the more volume we can produce on a daily basis. So we want to be able to have a quicker reaction time so that we can produce more volumes. That also drives down our capital costs because more volumes with the same equipment keeps our capital costs low. So there's a whole number of items that we're working on to make sure that we're the low cost operator as we move forward.
Interesting. Okay, how about cash? How is the company doing for capital then as you're, again, now producing these samples? You want to generate some cash, but I don't think you'll have cash flow by this year. So how is the company for capital?
I mean, we're fine. We're working with our partner. We've got a fantastic partner that we're working with. We keep our costs low, and so we are fine. We're being efficient. We want to put results out. The most important thing for us is let's demonstrate that we can do this. Let's make sure that we're efficient. Let's make sure it's working. So far, we've been able to produce carbonate. That's a huge step forward. As we move forward, we want to be able to prove that we're going to be the low cost operator out there. So today, we're fine for cash.
Can you explain this partnership any more to us in terms of how the company that you're working with, the Oilfields operator here, how they're benefiting from this relationship? And if you're fine for capital, then how they're in a way supporting you on top of all that?
What we've done is we're really integrating the teams in terms of getting production off the ground. It's important because ultimately our goal is to be 50-50 partners from this operation. And so they get a benefit of generating cash flow as well. We'll be the operator, we've got the technology. It's a huge win. In the oil and gas industry, water historically has been, you have to deal with the water. For every barrel of oil, in the Permian, you've got 3 to 4 barrels of water. You can't sell the water until you can't sell the oil until you dispose of the water. So it's a cost center for oil and gas companies. We want to turn that cost center into a cash flow revenue center that makes everybody much more profitable. And again, with our partner, by benefiting and being partners with us, they become one of the low cost operators out there. That's a big deal for them as well.
All right, Alex. Hey, thanks for this update. I'll post a link to the company's website. All of you can click that link, read over the recent news, and please continue to send me any questions you have for Alex. My email address, fleck@kereport.com. Again, Alex Wylie, President and CEO of Volt Lithium. Alex, I appreciate the update today.
Thank you.